It is my pleasure. I'm Steve Johnson, one of the board members of the Tampa Bay chapter of FEI. And today we have a fantastic presentation, very timely and very useful for the demand for skilled talents, presented by one of our sponsors, a gold sponsor, Robert Half. And it's my pleasure to introduce our two presenters today. The first is Chad. Chad is the district president for Robert Half. He started with Robert Half in 1999, so he's been there a little bit. So he's got some good experience. And especially for this group, he had 5 years of prior banking experience. So he knows some of the hassles that us finance and accounting people go through. In addition, we have with us Kenya, and she's senior vice president for Robert Half. She's only been with the company 15 years. So she's a newbie, relatively speaking. But something, little known facts about Kenya is she served in the U.S. Navy, worked on Tom Cruise's F-14 in the movie Top Gun. And she was a former cheerleader at Purdue University. So go Big Ten. And with that, I will turn it over to Chad and Kenya. Thank you.
Yeah, thanks, Steve. We're excited to be here and part of the chapter and the presentation today. You didn't mention, Steve, that when I started with Robert Half, I was only 12. So I have a baby face, but yeah, it's been 20 going on 23 years. So the demand for skilled talent presentation is one of the better ones that we're always happy to present on. I think you'll find it covers some really timely and good market detail. Kenya and I can fill in some more blanks for the Tampa Bay market as well. We'll be talking about a number of different things. I'm going to share my screen really quick before I forget. So hopefully you all can see the presentation. Kenya, if you could just let me know that you could see it.
Yep.
Chad, it looks good. And if you don't mind, I would want to say, and it's my fault, is for those folks that want CPE for this presentation, we'll have a series of really difficult questions. So pay attention and just answer those questions, stay to the end, and you'll get your 1 CPE credit. Thanks again, Chad. Sorry for the interruption.
No worries. Well, we've got a smaller group, which is great. Hopefully we can be very interactive. The last thing you want is to hear Kenya and I talk and drone on and on for the next 50 minutes or so. So we'd love to hear from you. So we're going to try to make this interactive. There's some poll questions. We're going to ask for your input, and hopefully we can, share some insights, and you all can share with each other some insights as well. So thanks again for having us, and we look forward to sharing the next hour with you. So Kenya, I'll turn it to you.
Yeah, thank you so much, Chad. And thank you, Steve, for the introduction. Just wanted to, and I think I've met probably everyone that's on here at one point in my career or at an FEI event, but just wanted to kind of remind you what we do here at Robert Half, specifically management resources. I specialize in placing senior level accounting and finance professionals in 4 main areas: governance, risk compliance, staff aug, workload management, systems, business process improvement, and then cost control and cash management. So just as an FYI, that's our specialty. So we can go ahead and kick off with the first polling question. Okay, so do you guys take the time to familiarize yourself with unemployment data released by the Bureau of Labor Statistics? I'll give you a little time to answer here. All right. Kind of a mix across the board. Okay, question, where do you typically find this data? So there's definitely different, I hear it on the morning news, when I'm getting ready in the morning, you'll hear about the number of jobs that are open or the current unemployment rate for the last month. You can go directly to the BLS website. Also, this white paper that we put out, the demand for skilled talent, we put it out twice a year. So usually you can call any of your Robert Half reps, and we are fully informed on any recent data and information that's come out for the prior month. So, and then I guess the other thing is I'd love to hear, how it affects anyone's daily decisions, in the workplace. If you hear that unemployment's gone down again, does it, affect your hiring or your decision to hire, or your decision to move any faster on a hire? So
Kenya,
mm,
I don't know if you're taking questions during, I think you said you wanted interactive. So
yeah,
one question I have for you all is, especially in our industries, the general unemployment is very, very low. Of course, we've got a lot of people that are out of the market right now, but in the accounting and finance world, really the professional, I've heard somewhere around that the unemployment rate might be as low as 1.5%. Is that something you all see?
Yeah,
absolutely. Go ahead.
very true. Go ahead, Kenya. Go ahead.
No, I was just going to say, I think at one point in here, we have a little bit of a breakdown on a slide as the unemployment per type of position in accounting and finance. But we are seeing, and it varies in each market, but with degreed professionals over the age of 25, I think the last statistic that I received was under 2.4%. And then when you get into business analysts, systems business analysts, financial analysts, which, we all know a senior financial analyst can be a lot of different things for different industries. We're under 1.2% in most areas. So definitely a very tight market in with accounting and finance.
Yeah, I would just add, Steve, it's a good point. We've seen for years that there's the general unemployment rate, and then when you dig into college degree, 25 and older in accounting and finance, it can be less than half, and even less than that in many cases. So I would say in this market, even though the headline number is, somewhere around 3.5%, in accounting and finance, it's much less. And so we're just seeing a very strong, economy from an employment standpoint. Companies are doing everything they can to find talent, attract talent, retain talent. There's far more job openings than there are applicants. That trend continues. I think the most recent stat, somewhere north of 11 million job openings, which is far greater than the number of unemployed, quote unquote, unemployed folks in the market. I think one other metric that we keep an eye on is the quit rate and the participation rate. The quit rate historically is an indicator of the health of, the worker. If people are feeling confident, then they're willing to change jobs and move, and that remains high. We're seeing the participation rate increase, which I think is important. Through the pandemic, I think we saw, there were a number of people that for a number of reasons couldn't work, chose not to work, had family and personal challenges that prevented them from working, and now, are starting to come back into the market, which I think is a very helpful thing.
Okay. So next slide.
We'll keep going.
Yeah. Okay. So I hear about, I'm sure y'all know what ghosting is. I hear about ghosting all the time. When it comes to hiring, employers are getting more and more frustrated with ghosting. And this is just basically where a candidate disappears at some point during the recruitment process. They might disappear. You might want to make the offer. You can't even get a hold of them to make the offer. They might accept the offer, and then you never hear from them again. The worst case scenario, and I hear it probably at least once or twice a month, where someone's accepted an offer, there's a start date at hand. I'll call my client on the first day just to make sure, that their permanent employee has started and they didn't show up to work. So, that could be for a number of reasons. A lot of times employees are getting counter offers for several $1,000s more, and deciding to stay with their current role. Another reason might be that most candidates that we talk to that have offers have maybe 5 or 6 offers on the table, and they just don't necessarily want to go back to the company and let them know that they've decided to go a different direction. Not saying that in any way that it's the right thing to do, but it is happening left and right. So I just wanted to kind of see a show of hands if there's a way to do that on here. How many of you have been ghosted after making an offer, even just within the last year?
or maybe you could drop in the chat if you want to just say yes or no if ghosting's been something that you've experienced. Steve says yes.
Okay. Well, it's definitely not fun. It's very frustrating. A lot of times, companies will wait for weeks to get somebody, to hire a permanent candidate, and then, they have to start the whole search over. And then maybe their number 2 or 3 have already moved along as well. So it just lengthens the hiring process even more. So with that, sorry, and I still have this polling question on here. I'm going to close this out. With that, 39% of employers have been ghosted by candidates since the pandemic, and then 33% of candidates have actually admitted to ghosting. So
it's happening. It's a trend in the market. We encourage clients to move fast. Don't let the gap in communication, linger. That just, opens the door for, the ghosting or, obviously there to become some problems. So in a market like the one we're in, move fast, especially when you think you've got someone that fits what you're looking for from a hiring profile.
And I would say also just one other thing is just to make sure you're continuing with the communication, even if they, they've accepted the offer, you have a start date of June 1 or, 2 weeks out, continue to have the line manager and maybe even HR as well kind of reach out on a regular basis just to kind of see how they're doing and check in and show interest.
So from a candidate perspective, it's certainly a buyer's market. Most candidates are getting multiple offers. They know that, if they're skilled and experienced, they're in demand right now. But, so it's interesting what are some of the top reasons why candidates may or may not accept an offer that you make? Oftentimes we go first thing to, well, it's the money, and, that's really, the number one driver. But, what we found is 40% of the time it's around the flexibility of the work schedule. And is that hybrid? Is that in person? Is that remote? What does that look like? And the flexibility question, right now is the number one driver that we hear and see. Of course, there are other important factors, but the flexibility driver is something that's front and center for many candidates as they're making a decision in terms of, should I stay at my current company? Should I look at this opportunity? And Kenya, you can chime in. We're seeing more and more clients think differently about this. And when the pandemic started, there was a lot of concern from smaller companies primarily about how can you have a hybrid workforce or a remote workforce?
Sure.
How can I hire remote, people when we've never done that before? We may or may not be equipped, et cetera. And we've seen that thought process evolve. And it seems more and more that more companies are open now to some sort of a hybrid scenario, or even for some, positions, a fully remote, option, which certainly opens up the candidate pool as well as the attractiveness of the role. So that's certainly a trend.
I would say one of the most interesting kind of things I've seen over the last year, just being in this job and talking to so many different companies across Tampa and Sarasota, and actually now even into Jacksonville, is as each new variant came out, companies were saying, okay, we're going back in on August 1st. We're going back in at least a couple of days a week on August 1st. And they would, put the memo out to the organization and plan on coming back in on August 1st. And either a new variant would hit and they'd pull back on it, or they'd start to see that. I had one company that lost 6 employees in a month period because they didn't want to come back in the office yet. So they said, okay, the CFO said, never mind, we're not going. And we were able to save a couple of the people, but they, some of them were long gone and already into other remote roles. So it's happened 2 or 3 times over the last year where the date's put out and then the company pulls back on it just because they just don't have the buy-in yet from the employees to go back into the office. So it's just been really interesting to watch.
So we'd love to hear from the group. Are you hybrid? Are you remote? Are you fully on site? Maybe someone could share some of the thoughts and what you all have done from your company's organizations from this perspective.
This
Sure,
is
there's
Steve
some.
Hall.
Yes, please.
We have about 35 employees that work for our firm, headquartered in Palm Harbor. When COVID happened, obviously everybody went remote except for maybe a few of the senior executives. Some of those positions we found actually work better remote, so they're going to remain. And then on other ones where we need them in the office periodically, where I think we're giving them like a floating day a week that they can, select to work out of their house. But I think it's still something that's being developed and thought through and trying to figure out what's the best formula. I know in some other roundtables that I'm part of with a bunch of CEOs, the concern with that is always culture and how do you groom the next senior level executive if you don't actually see them on a regular basis. So a lot of things to consider.
For sure.
Thanks for sharing, Steve. And I think a couple of really good points when you think about hybrid/remote. And as a company, we're going through this as well. How do you effectively train and onboard someone? How do you build culture? How do you develop the next leadership, talent pool? I think there are some serious challenges from that regard if people are fully remote or are in the office, very, very infrequently. I don't know that anybody has the answer to that yet, but I know that's a challenge that we're as an organization walking through. I'm curious though, Stephen, you mentioned you've decided that there are some roles that could be fully hybrid. What percentage of the 35 have you sort of deemed a fully remote is okay? I'm just curious.
Probably about 30%.
So a third, okay. And then the remainder, you're allowing some form of hybrid, one day or so out of the office, if I heard you correctly.
Correct. And those positions were actually hybrid prior to COVID.
Got it. Okay. That's great. And anyone else with a comment or something to share? We know it's an evolving challenge. Again, we deal with a majority of our clients are small to medium size, although we do have large companies, and we hear from the small to medium sized firms it's even more challenging if you're not equipped from a technology standpoint. So we know there's a lot of road there still to travel from a hybrid/remote. But from a candidate perspective, it is the number one reason they may not accept your offer. Number two has to do with the pace at which hiring is happening today. Candidates are getting multiple offers. Things are happening quickly. What we learned through the last few years are companies that haven't evolved their hiring process. Pre-COVID, it may have included 2 or 3 on-site interviews with several people, panel interviews, etc. That can take weeks. Nowadays, how can you supplement that with a video interview, a virtual interview? How do you speed that process up along? We see constantly every week clients that lose out on great talent just because they didn't move fast enough. And some of that has to do with just how you've adopted or changed your hiring, process. So, and then the third has to do with just the salary and how fast salaries are moving in the market that we are in. We've seen in some cases salaries that are jumping 20-30%, counter offers that are coming in, much higher than that. Just as companies scramble to make sure that compensation stays in line with the market. Certainly that's a part of the offer process, but really, the flexibility of workforce and the speed at which the hiring process takes place are 1 and 2 in terms of why offers aren't getting accepted. So I don't know if anybody has any comments to share in terms of hiring process, anything that you've changed, or Kenya, if you want to add anything.
No, I would just say that, a lot of my clients have sped up the process where instead of doing, we're doing a lot more virtual interviewing, even if it is an on-site job, we'll still do that. But they're doing more team interviews versus, 3 different people, 3 different times, and making the decisions, much quicker. So.
Mm-hmm. So let's hop to the next poll question. In general, How challenging is it to find for your company to find skilled talent today? This might be an easy one to answer, but we'll ask it anyway. And if anybody selects not challenging at all, we're going to have to call on you so you can tell us what you're doing, what the secret recipe is there. But obviously for most people, it's very challenging or somewhat challenging based on how many hires that you've had, how active you've been on the hiring market. I think varying degrees of challenge there, as well as the roles you're looking to fill. So no surprise, but certainly very challenging market.
Okay,
Go ahead.
so kind of going into the candidate's perspective, candidates are coming more prepared when they're getting offers. 51% of candidates have research salaries. Removing this polling question, have research salaries for the role prior to actually even going into the interview. 33% have calculated a salary based on their ideal salary or the personal and family financial goals. And then 25% actually discuss salaries with their colleagues on a pretty regular basis. I can tell you when I'm talking to candidates and clients, it's a regular conversation. I'm constantly sharing my screen, pulling up the salary guide, discussing what we're seeing in the market, and also helping candidates negotiate fair salaries in today's market as well. So right now is actually a great time to look for a job. Let's talk a little bit about permanent placement and just finding a permanent position. 65% of employers that we surveyed are looking to hire permanent roles. So these are newly added, created positions due to growth of the company or expansion of the company. A third are hiring to replace employees that were left vacant for many reasons: retirement, resignation, the Great Resignation, that they're calling it these days. And then only 2% of companies are saying that they are on a hiring freeze. So everybody's hiring out there pretty much. And then on a candidate or on the contract side, 71% of companies are looking to increase their amount of contract roles, whereas 19% say that there's really not been any change in their contract hiring. And then only a small percentage, 7%, are planning on reducing their use of contract workers. And only 3% said that they don't use contract workers at all. So I want to kind of stop here and talk about some of the reasons that we are seeing companies that are using contractors in all areas of professional services, not only accounting and finance, but in technology as well. One of the biggest reasons when COVID hit, we saw a lot of companies need to bring in consultants to help them be able to go remote or to automate some of their processes. This was both, effort from the accounting and finance teams and also technology teams, but that was where the bulk of our business, I believe, was nationally at the beginning of the pandemic. And right now, too, we're seeing companies using consultants just to basically fill that interim need while they're taking their time to hire that perfect candidate. Prior to the pandemic, I used to always tell clients it probably is going to take anywhere from 4 to 14 weeks to fill a permanent role with a perfect candidate. We're seeing even longer times these days. I will tell you, our permanent placement team at any given time prior to the pandemic probably had about 40 open positions. Now they have about 80 open positions. So it's just, having that extra bandwidth during the search process so that your team doesn't get burnt out. That's a pretty big reason to use contractors. Also, right now, I think a lot of companies are taking advantage of the capability of hiring a remote workforce. So they're able to find skill sets that aren't necessarily here in Tampa Bay or prevalent in our geographic area. And they're hiring candidates with special skill sets for various projects where they may not have that skill on their staff, but they need it for a period of time to kind of get through that next project or initiative.
Yeah, I think I would just add the trend that we saw the last few years, our companies are going to be using variable labor more so, for the future. That gives you the opportunity to flex when things are busier, bring in additional help, and then during slower times or slower seasons, you can scale back. And so we believe that trend is here to stay, and companies are thinking differently and strategically about how to use outside contract help or outside consulting help through ebbs and flows and just the seasonality of business. And we believe that, again, that trend is here to stay. So I don't know if anybody in the group would want to add any comments or anything that you guys have seen.
I would say too, Chad, we're seeing a pretty big uptick in just the amount of companies that are looking to kind of streamline just end-to-end processes overall, really taking a deep dive into who do we have on the team, who do we have doing what, is everything documented? Should we, happen to have immediate turnover or somebody, because of the Great Resignation, cross-training teams and just making sure that they have their ducks in a row, kind of preparing for the worst and hoping for the best.
Yeah, the two things that my company has been really focused on contracts has been either a specific skill set that our team doesn't have for a particular project, or quite honestly, the fact that the market is generally so tight, and the help we need may only be offering contract services.
Yep, that we see that as well, Steve. So thanks for sharing. Totally agree.
The beauty of working from home. That's Sophie, everyone. She's making her debut for the UPS guy. I apologize. All right, top 5 hiring industries in the U.S. today. We're going to talk about the U.S. and then we're also going to go into kind of what we're seeing here in the Tampa Bay market. So number 1, not in no particular order, administrative and support services, information technology, business and professional services, advertising, media and publishing, and then finance and insurance. So here in Tampa Bay, I would say our top 5 hiring industry or top hiring industries or industries that we have available are healthcare, financial services, and manufacturing. We are seeing, and as we all saw at the FEI event last night, Tampa is growing with the amazing display of Water Street. We saw all of the mixed use that's coming in. We're seeing a lot more startups, and we're also seeing a lot more IT companies coming into the area. And over the next 10 years, I can only imagine, how much growth we're going to have. So it's really diversifying the types of companies that people have to choose from. And so candidates are probably out there, looking for maybe other industries to, jump into and to learn, about those as well. So.
Very good. So let's keep going. The next poll question. What is your greatest staffing challenge right now? Hiring skilled professionals, retaining top performers, improving employee morale and productivity, adapting to a fully remote process. Love to hear your input. So again, not a big surprise. Kenya mentioned the latest buzzword of the Great Resignation. We've also been talking about what I think should be there, which is the Great Retention. How can companies proactively work on keeping their best people so you don't have to worry about hiring to replace? And how are you being proactive to discuss, compensation, career track, flexible work schedules, etc., so that your team doesn't feel the need to entertain an outside, opportunity or another offer. So, again, some companies are further along that journey than others, and sometimes it takes that surprise resignation to spark that conversation. But certainly not surprised to see the retention, answer from the group. A few things that we're finding from employer actions, because the market is so tight and it's a job seeker market, what are some things that companies are doing, to kind of help get ahead of the curve and attract and retain more talent? Obviously the salary question is a big one. Even though we know it's not the number one driver, we know it is an important driver. Salaries have moved so fast over the last year, even 6 months. We publish a salary guide and have for 50 some years as a company. It's used by the Department of Labor. It's something we've always been proud of. This is the first year we've decided to publish that salary guide twice a year, partly because the salary guide we published last October is already out of date in many cases because things have moved so fast in the market. So, for us to be looking at salaries now twice a year, we may go quarterly with our salary guide. We're still debating the frequency of that. I think is a testament to how fast the market has moved and how fast salaries are adjusting, and making sure that companies proactively address that, I think is a very important thing. We've talked about the remote and flexible work options, and proactively talking about that openly with your team is important. Companies are offering signing bonuses and different incentive packages to make your offer stand out, and give those candidates sort of that white glove approach in terms of the recruitment of that key person to your organization. We see that trending, increasing. More paid time off. We were talking about, every year the holidays impact us because we don't have, contractors on billing because they're off for the holidays. And I think we were all just commenting on Good Friday that happened, most recently, and how many clients and how many of our staff took time off for Good Friday. It felt like it was a bit more than normal. And I think because people are valuing their time off, and that's an important, benefit to offer. So we see companies offering more of that. Career growth we know is important. So how are you, offering opportunities for, people to grow? And that also might mean, changing some of the requirements that you look at when you want to hire for a key role, and being more flexible with, hiring profiles, and thinking a little bit more creatively about what type of candidate you might look to hire for a key role, and then grow that person up into the job. That's important. So, those are some of the key things that we've seen companies do to kind of change and adapt with the current market.
And on the flip side, as far as, candidates, what are they looking for? Number one, looking for 54% are looking for higher salaries. I think, we were discussing one of the big reasons here is that, during the uneasy times of COVID, many companies stopped with pay raises, they stopped bonuses. They just really weren't sure the direction and what they should do. And so that's really created a lot of pent up demand for a pay raise. So I think also, candidates we are seeing are getting higher salary offers from companies out of state for fully remote jobs. I can't tell you how many times I've, touched base with a candidate that I've worked with over the years that, is sitting pretty, very happy in a fully remote job with a company out of New York, making probably 15 grand more than what I was even going to be able to offer them, or, Texas. I hear a lot about Texas. So I think companies are looking to our area to find candidates that would be very happy with their pay level. 38% are looking for better benefits and perks. 34% would like the ability to work remotely long term. 30% are looking for advancement opportunities. And then 28% are really just looking for more appreciation and recognition than they're getting from their current employer.
So I referenced our salary guide, earlier, and as of last week, we've just released our most recent copy, which we're going to do twice a year now. I think there's some interesting stats. This slide is unfortunately a little out of date because this presentation was put together, before last Friday. But as you can see, salary changes, for some of these key roles listed, are much higher than a traditional 3 to 5% adjustment that most people are used to. And I think Kenya and I would say it's even higher from these rates as this year's gone along. I think Kenya brought up a good point. For much of 2020 and even some of 2021, many companies didn't sort of froze salaries, froze raises out of necessity. And that created, I think, a bit of a pent-up demand out there. As companies are trying to reassess that, to do so in a different thought process, I think is really important. What I mean by that is, for some companies, it feels unnatural to give someone more than a 5% raise. We've never done that before. It seems excessive. But if you're really focused on retention, you've really got to look at the job value of that role in the market and make sure that your pay rate is really in line with the job value. And that might mean a higher adjustment, to do that, or you're going to run the risk of having to, rehire that seat yet again. So that's definitely something we would highly encourage people to do is take a proactive look. Our salary guide can be very helpful. There's BLS, stats out there that can be very helpful, and obviously, we're happy to provide any additional detail.
And I know I actually recommend that my clients kind of do a quarterly assessment of their teams as far as where they're at with salary. I know we're updating the salary guide currently, twice a year, but I do think it's good to do a quarterly assessment and just make sure a touch base check in, make sure that your current employees are happy with where they're at.
So, to kind of reference, I think, Steve, what you brought up earlier in the talk, what are some of the current unemployment rates for some of these selective roles? And again, this data is a little bit out of shape because it's evolved even over the last 2 months. But you look at some of these roles, and to your point, it's half of the national average and even less than that for some of these key roles. So, we don't see this changing anytime soon. If you just look at supply and demand, as the labor workforce participation rate increases, that will help. But there aren't a boatload of financial, managers sitting on the sidelines, not in the workforce. There are some, and we anticipate they'll come back in. But we just see that, the supply and demand of some of these key, roles is in favor of the candidate, and these rates will probably remain very low, for the foreseeable future.
I would just put out there too, I feel that we're very lucky that we do live in Tampa Bay in Florida because we do have a lot of people moving here. So, I think more than other areas, we are getting, kind of we'll find new fresh candidates here and there that we're like, oh, where'd you come from? So that is good, that we're seeing new talent come through, but I do see that they don't stay on the market for long. So they get snatched up very quickly. Okay. So as we mentioned before, here's what finance managers are planning to do. 65% will be hiring for permanent positions in the first half and in the remainder of 2022. 33% are hiring for only the vacated roles, and 72% will increase the use of contract workers. Now, this is information that is directly from our salary guide and our research and data, but as you can see, it's very, very closely correlates with the BLS and what the national standards are.
Maybe we could pause for a minute and just ask the group if this is in line with your expectations, or does anybody have any different perspective on what your plans might be? Okay, we'll keep going.
And continuing on with more data from our salary guide, I thought this was pretty staggering. 91% of managers are saying that they're having challenges finding skilled professionals. And these are the main areas that they're finding the shortages in: finance and FP&A, operational accounting, AP/AR, bookkeeping, and then budgets and analysis, which again, I think I mentioned it's under 1% for any type of financial analysis role. And then 91% are worried that their top employees are going to leave.
So we'll go to poll question number 4. Has your company announced that it will allow remote work in a more frequent basis post-pandemic? Yes, will be allowed, but more frequent basis. Yes, but it's based on the manager's discretion. No, everyone's going to be back in the company's remote work arrangements pre-pandemic, or you're not sure yet. Well, it looks like the majority of the group have already announced and will be going to a remote work or some sort of a hybrid scenario. So that's good to hear. We don't have anyone on the not sure, or we haven't. We won't allow remote work. So I think that's a good thing to see.
I'll kind of throw in there too. I have a couple of clients that, for whatever reason, will not allow remote work, whether it just be that the owners are very old school and they want to see everybody's face every day, or maybe they're a government entity that just has that requirement. I will tell you, they are having a very, very hard time with the recruiting process. And we are also having a very hard time helping them, both on the permanent placement side and the contract side, and then their own internal recruiters. It's definitely, sometimes I feel like I'm beating a dead horse when I'm talking to them about, the option of allowing some remote, and, it's very tough when you're not offering that.
So some insight on finance and accounting professionals, and in terms of what their outlook is. As I mentioned earlier, the participation rate and the quit rate is a good indication of sentiment. And we know that 60%, the stats would suggest 60% of finance professionals will look for a new job with remote options if they're required to, return to their office. So we know it's a hot button topic, and that it's a key topic that companies have to address if they haven't. 83% are confident that if they needed to look for a job, they could find one. So that's a very bullish outlook on, the sentiment of the power of the employee in the market, and this being a candidate hot market. So that's certainly not a surprise, I would think, to this group. From an employer perspective, sort of the work from home and remote, 66% of employers that we polled want workers in the office on a full-time basis. That's what companies would like to have happen. Whether that's going to happen or not, we know that's sort of the sentiment. 18% would allow remote work on a part-time basis. 15% let employees decide, and 1% have given up and are going fully remote. So, again, we know that this mindset is shifting and changing. I think the market is driving this, with companies that are either having challenges hiring people because of your current policy, or losing top talent. And so you're having trouble retaining employees because of, your sort of current in-office policy. So I think it's something that we'll continue to see shift as the year goes on, and companies find, the right balance here.
And I think from the employees' perspective, a lot of them have gotten accustomed to being able to work from home. And I hear all the time, I was doing my job from home 5 days a week. Why would I need to go back to the office now? And so, 57% are saying that they're looking for a remote optional role where they have flexibility to work where they want to work. 54% are seeking a fully remote position, never want to go back in the office again. And 47% would like the hybrid position, a couple of days on, a couple of days off. Once in a while, I will find candidates that want to be 100% in the office. Generally, it's because they have several small children at home and they can't concentrate. I do have a couple of the clients I work with that say, I cannot work from home. I can't stay out of the refrigerator. I catch myself watching TV. It's just funny to me, but it's just, there are a few people that like to go in the office full time. Are any of those people on the call?
I'll share, Kenya. I go to the office every day. My wife thinks work from home means work on the home. So she likes to give me a to-do list if I work from home. So it's just easier for me to come to the office.
That makes sense for sure.
One thing I've heard recently, though, is a lot of kind of, I would say, lower level or newer employees not being able to come in, and the camaraderie, the learning, the culture of the business. It takes longer to get them up to speed. And again, you've got the millennials out there that some love it. They just love to do chats and DMs and emails and do that stuff. They would rather not look at another human from there. But I have heard recently that one of the big push that employers are saying is, hey, we need to at least have folks come in every once in a while, just so you can meet and get that camaraderie.
Completely agree.
For one, I like working in the office, but with the pandemic and kids and daycare and what do you do with your kids, I've take full advantage of our 2 days at home. Even though, in a perfect world, I like working in the office, but all the outside extenuating factors over the last 2 years they can't be denied.
Very true, Bob. Thanks for sharing. I would say, Steve, you bring up a great point. We don't have data, polling data or survey data yet, but I think we'll get this anecdotally. As we've hired at Robert Half, we have 14 offices in Florida that I oversee. A lot of the newer hires actually like coming into the office for that point, the camaraderie, connecting. They don't want to come in 5 days a week, and they don't want to be here 10 hours a day, that's for sure. But to come to the office with a purpose and to make the office experience, I think something that's beneficial is something as a company we're trying to think through. How do we do that? How do we make it not a not a negative thing, or but make it a positive, so that their interest and there's a benefit to coming in and working with your peer group and learning and developing and growing camaraderie. I think there are some people out there that just want to do things over sort of a chat or email, but I'd say that's probably a smaller percentage versus the larger that I'm seeing that do like coming in occasionally and being a part of the group. That's what we're seeing.
All right, so before we close, let's kind of take a look at the future of hybrid work. So right now, managers will require 16% are requiring a hybrid in-office and remote model. 70% we're expecting over the next year will require a fully in-office model, and 12% will allow the employee to kind of decide on their own. Here are some of the main challenges that managers are having when overseeing hybrid teams. And I will tell you, I got so much concern and questions and calls from managers that I've worked with over the years, not really sure how to manage a remote worker or a hybrid team when the pandemic hit. And I think everybody was kind of learning as we went along. But the biggest challenge was just effective communication. 20% say just being able to trust that their employees are getting their work done. Where I don't see that as much in a deadline-driven accounting department, either you're hitting your deadlines or you're not most of the time. But and then 20% gauging the workloads, preventing burnout. 20% recognizing accomplishments of their team, and then 19% supporting that professional development. So those are the 5 main challenges. And just as a big warning, 1 in 3 professionals would consider leaving their position or looking for a new job if they were required to return to the office 100% of the time.
And I would just add, not to sound like a broken record, so this is 2,800 senior managers that we surveyed and 1,000 workers that was done at the first of the year. My guess is that 71% fully in office is going to change as the year goes on. I think companies are going to learn that hiring and retaining people is going to mean that that number's got to probably be different and it's going to go down. That's my personal opinion and guess. We'll have to see what happens later in the year when we repoll the group to see what they're actually doing. I would imagine we'll have that data for you all later this year. So I know we've only got a few minutes left. But yeah, go ahead.
I was just going to say, as I mentioned, I can count, several companies that have, put the memo out, we're returning to the office, and then, taken it back and said, okay, never mind, let's try something else. So.
Well, I know we're only a few minutes left, so we want to open it up and maybe let the group share, ask questions if there's feedback or any insight you'd like to share. We've got some time to do that.
First of all, this is Steve Johnson. First of all, I just want to tell you is I love the Robert Half salary guide. I've used that for years. It's been a great tool against my cheap HR people from there. And maybe and you guys might have it. I always just go straight to the money part, but you might have the unemployment rates for professionals in there. I'll have to double check. Is a lot of times is I need to explain to the HR that a finance and accounting professional is much different than a customer service or a manufacturing, a line worker. From there, it's we're drawing from a much smaller talent pool.
For sure. And, Steve, I don't know that the specific unemployment rates, probably because they would be out of date annually, are in the salary guide, but that's another reason that we do put out this white paper. I think this is version number 21 or 22. We've been putting it out twice a year. So you can call me at any time. I'll get you the most up-to-date information to share with your HR and make sure you're, fully armed when you walk in the office.
Beautiful. Thank you very much.
Yeah.
Well, we appreciate the opportunity to to speak to the group. Hopefully you found some informative points through the presentation, and again, we can open it up if there's any comments or questions from the group, but if not, we'll give you a few minutes back and maybe let you finish your lunch. But thanks again for the opportunity to speak to the group. Hopefully we can do it again.
Thank you.
Thanks, everyone.
Good job.
Thank you.
Thank you so much, guys.
Thanks, Denise.
Thanks, everybody.